Thank you, Chris, and welcome to all of our investors, analysts, and customers who are joining us for today's call. This was another solid quarter for the company. Our qualified pipeline of sales opportunities stands at around $86 million of highly qualified opportunities and is well diversified across all key verticals where we participate. Despite Q2 being a seasonally softer quarter, as we mentioned earlier, we still posted record results on a year-over-year basis, adding $5.1 million of new bookings, 4 times higher than the second quarter of fiscal 2023. Historically, the second half of the year has been stronger than the first half for Xtract One, as it aligns better with the buying cycles of some of our key customer segments, such as sports and live entertainment and schools. The first group typically looks for security solutions heading into the busy summer event season, and certainly for sports venues that make investments during the off-season for their professional sports teams. Schools and colleges similarly make decisions during the spring and summer season prior to the return of school for its students in the autumn. In addition, we're expecting to receive an award from the Department of Homeland Security in the very near future, with Smart Gateway becoming an approved technology under the Safety Act. And I'm very glad to say, after ongoing conversations with the DHS as recent as this week, we believe the award is pending. While we are already far down the sales cycle with numerous professional sports teams, this award will be a final checkbox needed for many of them to satisfy the requirements of those customers and get those orders in the door. I'm also very pleased to report that the security requirements for NHL teams to deploy our solution has been completed. Demand for our solutions continues to accelerate, and I'm very pleased with the new customers we've added and those that we've been able to announce during the quarter. We're also excited to be working with the Baird Center of Milwaukee, the largest convention center in Wisconsin. Convention centers pose an interesting new challenge in terms of security, as these facilities hold much larger scale events with a different demographic of attendees and will often host multiple events at the same time, each with their own unique security requirements. The Smart Gateway provides unique flexibility and a solution that can meet these diverse needs for these different types of audiences and demographics specific to a convention center. At the same time, our expansion to other markets continues to be successful and growing, such that in Q2, over 50% of new bookings came from outside our core sports and entertainment market. Over the last several months, we've been making strides to improve the Smart Gateway to create a much more out-of-the-box experience. These changes have enabled us to move into the next phase of our growth strategy, which is leveraging channel partners. We are actively onboarding selected partners who will promote and sell the company's solutions on its behalf, allowing us to increase our penetration across North America and, in fact, globally in a cost-effective and scalable manner. I'm pleased to say that we're already starting to see early success for our first few partners, who collectively were responsible for about 20% of all new bookings in Q2. While we will continue to sell direct to end customers for specific market segments, we are excited to be taking this next step in our evolution and see the partner channel sales accelerating the top-line growth going forward for the company.
Revenue for the platform segment was approximately $2.8 million for the quarter. Notably, in the second quarter, about 55% of revenue came from upfront purchase contracts versus approximately 70% in the first quarter. Our gross profit margin during Q2 was 61.1%. Going forward, we anticipate healthy margins north of 60% and are undergoing efforts to continually improve margins. The company's contractual backlog grew to $12.3 million, an increase of about 29% as compared to Q1. We had an additional $10 million worth of signed agreements pending installation, the majority of which we expect to be installed within the next 12 months. While the balance was down about 7% from Q1, it's important to note that part of the reason is that we deployed a significant number of systems during the quarter and moved a large portion of that $10.8 million balance from the first quarter into revenue and/or contractual backlog in this quarter. During the quarter, the company had net cash outflow of $1.1 million, compared with $3 million in Q1, primarily due to changes in working capital. This largely reflects the company's recent initiatives to improve the timing of cash flows from our contracts. Excluding changes in working capital, we spent approximately $2.5 million, up slightly from Q1, but still lower than all other prior quarters, which continues a general downward trend in cash burn.
Are you seeing anything with the current uncertainties in this landscape that are impacting sales processes or sales cycles and maybe how you're looking at this mix of channel reseller versus your direct sales.
Yeah, a couple of things there, Mike. First off, I think the macro environment, as we mentioned earlier, is only getting worse, unfortunately. The world is more uncertain, there's more social unrest, and there isn't a day that goes by when we don't see tragic events. And what that does is, in terms of our sales processes and sales cycles, we see a notable trend where customers move from something like weapons detection being a nice-to-have to becoming a must-have. I would look back 12 months ago and look at the number of RFPs that we receive on a weekly basis, and it's gone up by a magnitude of 10, easily.
Hey, good morning, guys. Thanks a lot for taking my questions here. Are you finding that it's easier when you're now going into customers and talking to them and saying, hey, look, we've been validated by someone like MSG, and so, has this helped you kind of close more deals and get deals past the finish line much easier?
It absolutely has. When we've got referenceability from Fortune 50, Fortune 100 type organizations, major brand names, some of them may not wish to announce themselves publicly, but many of them, because of their satisfaction with our solution, are willing to take reference calls from peers in their industry. So as an example, we've done very well in the automotive industry. All the chief security officers within that industry, they all know each other. And so they pick up the phone, they call each other, and they take the reference calls. And we're very, very pleased that many of those customers that we have become very, very strong advocates for our business and for our product because of the positive experience they've had end-to-end with not only the solution, but the support and all other aspects of delivering a solution to the market.
Can you comment on some of the new wins that you have seen? And are these customers ripping and replacing older hardware with your next-gen solutions like yours, or would you find that it's more like net new stadiums that are, putting out a security system in the first place?
Probably about 50% of the new business we're winning is for folks who are ripping out, legacy technologies and in some cases competitive technologies. And the other 50% is for customers who've never thought about having to do screening before. But because of macro environment, this is now, as I said earlier, become a must-have instead of a nice-to-have.
Hi, good morning, everyone. Thanks for taking my questions. Peter, can you give us some indication of how long it takes to get one of these channel partners up to speed and educated on the product?
Again, it depends on the channel partner. The ones that we've specifically targeted are those folks who may not carry a very large line card of thousands of products. And so they're very interested and they've got demand from their customers. So the pull from their customers is pulling them to find us and deliver solutions. I'd say on average, from the first conversation to the point where we're seeing the first sale with a customer, it could be as short as 60 days. In general, it's closer to about 90 days.
Appreciate that. That's helpful. And then on the installation backlog, 10 million over 12 months. I'm curious, are you waiting on customers, or is that a capacity issue on your end?
No, it's actually not so much a capacity issue on our end. We've, I think, as I've referenced in prior calls, we set ourselves a target to meet the demand that we are seeing and the growth for the company to double our manufacturing capacity by the end of January, which we successfully did. And we're on track to double that capacity again by the end of July in order to address the backlog and address the pull. In many cases, the the backlog that we have is either a function of the schedule and timing for the customers. If they're building a new building, for example, and they don't take occupancy and open that for a certain period of time, or we're seeing customers who are doing phased rollouts over time. You imagine a very large school organization, they're not going to flash cut dozens of schools. They're going to do it in a progressive manner.
As you expand out your channel partner program, what do you think the ultimate contribution margin of that channel will be for you? Is it kind of higher, lower, or the same as your the direct sales that you do?
It's a great question, but the benefit of the channel model is due to their deep relationships, established book of business, existing contracts. It can be a very, very cost-effective process to bring on new channel partners and to have them drive a lot of the business and serve and support a lot of the installed base of customers. It offsets a lot of my marketing costs, my sales costs, my support costs that I would otherwise incur for a direct model. And so those partners who can, bring in a large book of business and do so very cost effectively where I don't have to invest in other operational areas to attract that pipeline can be incredibly profitable and drive profit at the same level or potentially even higher into the business.
So my question is specifically, do you think you'll be able to get to cash flow profitability, with what, not just what you have on hand, but I know that there are some warrants outstanding from your investment partners that could be tapped. Do you think that, in all likelihood, you'll get to that cash flow positivity without, having to do some sort of unusual action in terms of raising capital outside of your existing investors?
Well, I've got my thoughts on that, and my quick answer is, can I see a path to cash flow break even? Absolutely. However, the market demand is so strong and so significant that we will continuously look at the best way to raise shareholder value by looking at what is required to continuously grow the company at an accelerated pace. And if that means a new injection of capital in order to provide significant returns, we will consider that as we would consider R&D investments, other investments, and other ways to operate the business in the best manner possible.